Aotearoa. Welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. A relief rally is underway on Wall Street, responding to the delays in tariffs by the US on EU goods. But first, an update of the overnight dairy pulse auction, where prices for both skim milk powder and whole milk powder slipped, although less than the futures market had suggested. The whole milk powder price was down 2.7% in US dollar terms from the prior week's full event, and a bit more in New Zealand dollars. To be fair, both prices had risen sharply since April, but this pullback still leaves it in a rising trend despite today's adjustment. And data releases resumed in the US after their holiday weekend, with durable goods orders pulling back in April after the unusually strong March gains. The pullback was largely in line with what was expected, however, 6.3% lower than the prior month, but up 2.7% from a year ago. Perhaps worryingly, excluding aircraft orders and non-defence capital goods, those orders barely budged in April, a sign that boardrooms remain skittish about future investment. And that was matched by the Dallas Fed's May factory survey, where activity was reported flat, with a decline in new orders. But consumers there seem happier, according to the Conference Board's May survey of consumer sentiment. But it was a survey taken before the latest US threats on the EU, so there's a sense of relief rally here too after the China tariff pullback. However, despite the month-on-month gain, this indicator is still tracking lower on the longer term, still lower than year-ago levels. Sentiment will be challenged again soon. There are a couple of housing indicators out overnight, and both recorded falls in American house prices. The FHA one was spun as an improvement, but it wasn't, and the S&P Case-Shiller one was again but a tiny one, and at the least since mid-2023. And the bond market isn't feeling any better. The latest US Treasury 2-year auction, although as well supported as usual, brought a median yield of 3.90%, up from 3.74% at the prior equivalent event a month ago. Across the border, core Canadian business activity is struggling a bit too. April wholesale trade was down 0.9% from March, and that is kind of a lot for a one-month impact, one that records the initial tariff war skirmishes. Across the Pacific and China, profits at industrial firms rose 1.4% in the first 4 months of 2025 compared to the same 4 months of 2024, picking up from a 0.8% growth in the January to March period. For April alone, it was a rise of 5.2%. Having noted that, April 2024 was a weak base. Still, given the trade challenges and that China's factories are still very export-oriented and vulnerable to trade war risks, this has to be seen as a good result in the circumstances. But we should start to keep an eye on China's carmakers. It is attracting increasing scrutiny because the economic fundamentals seem to be leaking away and quite fast there. It could be another property development industry failure and could have just as large consequences if it wobbles too. They have no problem making cars, and good ones. But not only are they making more than the world needs, there are serious questions as to whether they can sell them for more than they cost to make. We should probably note that South Korean consumer sentiment jumped in May, rising back to levels that were common in November 2024 and prior. The ugly confusion period when its president went full Trump and tried a palace coup, which resulted in impeachment, one that was upheld by the courts, is now behind it, and Koreans are breathing easier. The rule of law won against a power grab. South Koreans will vote in a snap presidential election on Tuesday, June the 3rd. And still in South Korea, they should join the CPTPP bloc and diversify its trade as part of the bloc in the face of US uncertainties, a senior trade ex-minister is saying. In the EU, consumer and business sentiment basically held steady in May, according to the latest update. The trade wars are not yet unnerving the Europeans. The US Treasury 10-year yield is now at 4.44% and down 6 basis points from yesterday. And the price of gold will start today at $3,302 an ounce, down $38 from yesterday. And oil prices are down $1 from yesterday, at just over $60.50 a barrel in the US, while the international Brent price is just under $64 a barrel now. And the Kiwi dollar is down at 59.5 US cents, a half-cent retreat from yesterday at this time as commodity currencies are out of favour today. Against the Aussie, we're down 20 basis points at 92.3 Australian cents. Against the euro, we're holding at 52.5 euro cents. That all means our trade-weighted index starts today still just over 67.6 and down 30 basis points from yesterday. And the Bitcoin price starts today at $110,309 and up another 1.2% from yesterday. Volatility over the past 24 hours has been modest at just on plus or minus 1.2% as well. Check back with us at 2 p.m. this afternoon for the RBNZ's May monetary policy statement and OCR review. As you will know by now, everyone expects a 25 basis point cut, but the outlook from there is reasonably clouded. So Governor Hawkesby's analysis at 3 p.m. is keenly awaited. We'll have full coverage. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.